Welcome to the Daily Market Recap. Today is Tuesday, August 25th, 2026. Wall Street pulled off a solid green session today with major indexes grinding higher as dip buyers stepped back into the fray. The S&P 500 tacked on about 0.3%, fueled by a resilient mega-cap tech sector and an explosive pop in biotech stocks. Traders shrugged off early morning jitters, preferring to stack cash into growth names ahead of crucial economic data releases later this week. Looking at the sector charts, technology and healthcare took the crown today, leading the market charge with strong institutional buying in semiconductors and biotechs. On the flip side, consumer discretionary and retail got absolutely hammered, dragged down by ugly earnings reactions and cautious consumer guidance. Energy and industrials held their ground in quiet side-to-side trading. The Fear and Greed Index flashed a reading of 59 today, placing us comfortably in greed territory. Market mood is upbeat, but don't call it euphoria just yet. Investors are cautiously optimistic, keeping one eye on stock rallies and the other on incoming economic data. Our headline story today: tech stocks are back in the driver's seat. Massive demand for artificial intelligence hardware and cloud infrastructure sparked a fresh wave of buying across the semiconductor sector. Institutional money poured right back into high beta tech leaders, proving that investors are still eager to buy any minor pullbacks in the AI supply chain. Over in retail land, it was a total bloodbath. A string of disappointing earnings updates revealed shrinking profit margins, inventory pressure, and increasingly selective shoppers. Retail executives warned that consumers are pulling back on non-essential spending, sending shockwaves through footwear, apparel, and department store equities across the board. Rounding out top news, central bank watchers got another reminder that the Fed remains strictly data dependent. Fed Speak today emphasized that future rate decisions will hinge entirely on upcoming labor market and inflation indicators. Bond yields stabilized on the news, giving equity markets a clear green light to push higher without surprise hawkish policy shocks. First up in our top gainer circle, AbCellera Biologics exploded higher today, soaring over 13% and touching new 52-week highs. The catalyst, Wall Street analysts issued a massive price target upgrade up to $30 following stellar Phase 2 clinical trial results for its antibody therapy program. Investors flooded into ABCL as peak sales projections skyrocketed. Next up, Moderna rocketed over 13% on huge volume. Biotech bulls charged in after encouraging progress across Moderna's clinical pipeline candidates and renewed enthusiasm for next-generation mRNA platform applications. The stock broke through key short-term resistance levels, making it one of the absolute best-performing large-cap healthcare plays on the board today. Closing out our top gainers, Supermicro Computer ripped nearly 8% higher, AI infrastructure remains king, and SMCI rode a wave of heavy institutional buying as tech demand continues to outpace expectations. Options volume exploded as traders positioned for further upside momentum in high-density server equipment. Starting off our top losers list, Dick's Sporting Goods suffered its worst single-day drop ever, plummeting nearly 30%. Second quarter results were dragged down by weakness in Foot Locker store sales and severe margin compression. To make matters worse, management slashed full-year earnings guidance, triggering a massive institutional sell-off. Next down, Bath Body Works tumbled over 8% as anxiety mounted ahead of its upcoming earnings report. Analysts are bracing for a steep 35% year-over-year drop in earnings per share due to heavy promotional discounting and slow foot traffic, sending cautious investors sprinting for the exits today. Rounding out the losers column, Dycom Industries caught a heavy wave of selling pressure, dropping significantly ahead of its earnings drop. Telecom infrastructure construction headwinds and elevated execution expectations led traders to de-risk positions before the company opens its books to Wall Street. Taking a look at the charts, the S&P 500 ETF, SPY, continues to show impressive structural strength, holding firmly around the $763 to $767 zones. Key support sits down at $758, 760 cents. As long as bulls defend that floor, the path of least resistance points toward overhead resistance near $768, 777 for a potential breakout to fresh record highs. Over on the tech-heavy NASDAQ 100 ETF QQQ, buyers stepped up near the $706 level. Immediate technical support rests down at $700, which served as a solid launch pad during recent pullbacks. On the upside, QQQ needs to clear resistance at $715 to trigger the next leg of momentum toward $720. Turning to small caps, the Russell 2000 ETF IWM is consolidating inside a tight technical range. Support is well defined between $215 and $218, where long-term moving averages reside. If small cap bulls can generate enough volume to break above $225 resistance, expect a rapid catch-up rally relative to mega cap tech. Shifting over to the crypto space, Bitcoin is trading in a range-bound channel between $62,000 and $64,000. Key structural support is holding steady in the $61,000 to $62,000 zone. crypto bulls need to push BTC decisively past $65,000 resistance with heavy volume to unlock the next major rally towards $70,000. Ethereum is currently hovering near the $2,450 to $2,500 region, quietly coiling after recent choppy price action. Solid buyer support remains parked at $2,400. A clean breakout above $2,550 resistance is the key trigger traders are watching to signal a broader trend reversal and renewed decentralized finance activity. The broader altcoin market remains in a selective stock pickers environment. While total altcoin market cap is respecting support levels, traders are treading carefully, favoring select AI and DeFi tokens over speculative microcaps. Keep an eye on total crypto market flows for signs of capital rotation. To wrap things up, market sentiment remains cautiously optimistic, with our greed fear index sitting comfortably at 59. Bulls clearly maintain control of the broader trend, but selective stock picking is crucial as earnings season volatility exposes vulnerable sectors. Tomorrow morning, all eyes will be on fresh quarterly earnings reports from Bath Body Works and Dycom Industries, along with crucial economic data on consumer sentiment and jobless claims. If you enjoyed this breakdown, smash that like button, hit subscribe, and drop your top stock pick in the comments below. See you next time.